Good afternoon. This is Todd Horwitz coming here from the floor of the CME Group in Chicago. And as we continue to track the 30-year Treasury bonds, we've now seen them come down to a level of support. But what we're really seeing here is the overall debt picture continues to change, and we keep seeing higher rates and more debt. And of course, that is going to become a problem, which is going to push these bonds even lower as we continue to see the markets evolve. And as we look at the CPI today, it was pretty much of a non-event to the bond markets, showing more of a Goldilocks economy, but that's really only the case when you know that the Federal Reserve is involved and in using their powers to suppress currencies to keep the interest rates lower. And of course, you can see that these markets are starting to break down a little bit. And of course, we're going to see them pull back farther. But at this particular juncture, we've got a little bit of a flat bottom here, and it looks like we'll probably see a little bit of a rally, which we'd like to sell at about 144.20 to 145 basis to June bonds. They're certainly going to go lower. We're certainly now in a bear market in Treasury bonds. And of course, that would pull us down, making interest rates go higher, which would be the natural evolution of what we're looking for anyway. So what we're looking for here is to be a seller at 144.20 to 145 in the June bonds. Looking for them to come down. Our next target on the downside is going to be around 140, 141 as we continue to know that the bear market is here, rates are going to rise, and we're going to go much higher. Now, this is in front of the next week's impending Fed meeting, but of course, they're pretty much public out with what they have to say all the time. So we know that they're still dovish. They're still trying to figure out how to exit their positions. In the meantime, the bond traders are taking over and they're selling bonds. We're going to join them and sell at about 144.20 to 145 as we continue to maintain our short since about 158. That's the way I see it. This is Todd Horwitz coming from the floor of the CME Group in Chicago.